Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon and find the real story behind these corporate filings. Today we are peering into Xenetic Biosciences Incorporated's proxy statement. This is the document companies use to talk to their shareholders before the big annual meeting. It tells you what is important to the company, who is running the show, and how they're spending your money. If you want to understand what is really going on behind the PR, you are in the right place. Make sure you are subscribed and join our Discord community, linked below, to keep the conversation going. Alright, let's dive into this Dev 14, a filing from Xenetic Biosciences Incorporated. Essentially, this is their formal invitation and agenda for their annual shareholder meeting, which will be held virtually this year on the 11th of December, 2025. Remember, when companies go virtual, it is often to save costs, but also sometimes to limit direct shareholder interaction. The meeting agenda includes the election of directors, the people who oversee the company's decisions. They're also asking shareholders to rubber, stamp an auditor, and to vote on executive pay. That last one, the say on pay vote, is advisory and non-binding, but it is a good indicator of how shareholders feel about how the company is compensating its top brass. They are proposing 6 directors to lead the company. We will look at their backgrounds shortly. Now, let's look at the people nominated to the board. Most companies want their nominees to have experience relevant to their industry, and Xenetic's board nominees are no exception. We have Grigory Borisenko, who has a background in life sciences and investments. Then there is Ferdas Jaldasstor, with experience in finance and corporate affairs from a large Indian conglomerate. Dmitry Jenkin brings his involvement with a Russian pharmaceutical company and experience in drug delivery research. Roger Kornberg is a Nobel laureate in chemistry, which is quite a credential, and he has board experience. Moshe Mizrahi is a co-founder of a medical technology company and has expertise in fundraising and value creation. Finally, Alexei Vinogradov has experience in business development and international markets. The Nominating and Corporate Governance Committee reviewed these candidates and their qualifications. The company also emphasizes board independence, which is crucial for good corporate governance. They've identified most of their directors as meeting Nasdaq's independence standards. However, it is important to note that some directors' independence was considered in light of potential transactions. Notably, Moshe Mizrahi's independence was reassessed in connection with a proposed transaction. Like many companies, Xenetic has an audit committee, a compensation committee, and a nominating and corporate governance committee. These committees are vital for overseeing specific areas of the company. The audit committee, for example, is responsible for financial reporting and the relationship with the auditors. They've identified Mr. Ferdas Jaldasstor as an audit committee financial expert. Speaking of auditors, Xenetic is proposing to ratify the selection of CBA's CPAs PC as their independent registered public accounting firm for the fiscal year ending the 31st of December 2025. Now, this is interesting. They mentioned that CBA's acquired the Attest business of Markham LLP, and Markham resigned as their auditor. This kind of transition can sometimes lead to questions about the audit continuity, but the filing states there were no material disagreements with the previous auditor. Let's look at what they paid their auditors for 2024. They paid Markham about $165,000 and in 2023 around $188,000. These are primarily audit fees and some audit-related fees, for instance, related to their S-3 registration statement. It is good to see that these services were approved by the Audit Committee, which is a standard practice to ensure auditor independence. Now, who is running the day-to-day operations? James Parslow is currently serving as the Interim Chief Executive Officer and Chief Financial Officer. He has been with the company since 2017 and has a strong accounting background. It is worth noting that he stepped into the Interim CEO role in May of 2024. Following the departure of the previous CEO. This is where we see how much the top executives are being paid. For 2024, James Parslow, as interim CEO and CFO, received a total compensation of about $481,000. This includes his salary, some stock options, and other compensation like benefits. The previous CEO, Jeffrey Eisenberg, who left in May 2024, had a total compensation of around $673,000 in 2024, mostly from severance and benefits. Dr. Curtis Lockshin, the former Chief Scientific Officer, who also departed in May 2024, received about $554,000. The compensation figures include severance packages, especially for those who departed in 2024. This is common practice to ensure a smooth transition and retain goodwill. Looking at outstanding equity awards, it shows the executives have stakes in the company through options and stock awards. These are designed to align their interests with shareholders, but their value is tied to the company's stock performance. For Mr. Parslow, as of the 31st of December 2024, He had various stock options with different exercise prices and vesting schedules. This section is really where the rubber meets the road trying to link pay to performance. They compare the total compensation reported in the summary table with compensation actually paid, calculated under CC rules, and relate that to the company's total shareholder return, or TSR, and its net loss for 2024. The compensation actually paid to the CEO was around $470,000, and for the former CEO about $623,000. The average compensation for other named executive officers was about $521,000. They show a significant net loss for the company across these years, ranging from about $4 million in 2024 down to $6.5 million in 2022. Interestingly, the compensation paid to executives actually increased in 2024, even with the net loss partly due to those severance packages we mentioned earlier. Their approach here is to show that the performance objectives for executive bonuses are linked to drivers of TSR, even if the direct link to stock price or net loss isn't always straightforward. They are essentially saying their incentives align with creating shareholder value, even during tough financial times. We see details on their employment agreements. Mr. Parslow's agreement provides for severance if terminated without cause or if he resigns for good reason, including a year of his base salary and benefits. His salary was increased to $400,000 when he became interim CEO, and he received a stock option grant. The former CEO, Mr. Eisenberg, and former CSO, Dr. Lokshin, also had agreements that included severance provisions upon their departure. These agreements are standard but can represent a significant financial commitment for the company if triggered. This table shows the total number of securities available for issuance under their equity plans. As of the 31st of December, 2024, there were about 197,000 shares available under their approved equity plans. This is important because it shows the company's ability to use stock and options to incentivize employees and directors. Looking at director compensation, non-employee directors receive an annual retainer of $43,000 plus options to acquire company stock. For example, directors like Grigory Borisenko, Firdaus Jaldastor, Roger Kornberg, and Alexei Vinogradov received around $51,000 in total compensation for 2024, which includes their cash retainer and the value of stock options. It is interesting that Dr. Dmitry Jenkin and Mr. Moshe Mizrahi did not receive compensation in 2024 because the board determined they were not independent. This is the say on pay vote we talked about. Shareholders are asked to approve the compensation of the named executive officers. While non-binding, the board says they will consider the outcome when setting future compensation. Now let's talk about related party transactions, which can sometimes raise red flags if not handled transparently. Xenetic has a history of dealings with PJC Pharmsynthese, a company where two of Xenetic's current directors, Dmitry Jenkin and Alexei Vinogradov, also sit on the board. They entered into collaborative research and development agreements, and there was also a loan agreement. Pharmsynthese has paid off that loan, so there are no outstanding amounts. However, the company notes that Pharmsynthese has not yet brought any resultant commercial products to market, meaning past investments haven't yet yielded revenue for Xenetic from this arrangement. Another related party is Periness Technologies Limited. Dr. Dmitry Jenkin and Mr. Moshe Mizrahi are significant shareholders, or majority shareholders, and directors of Periness. Xenetic entered into a clinical trial services agreement with Periness estimated at about $300,000. This is a case where directors have a stake in a company Xenetic does business with. In a similar vein, Dr. Dmitry Jenkin, a director and chairman of the board, has a consulting agreement with Xenetic for their oncology program. Xenetic paid him about $300,000 in the first 9 months of 2025 for these services. He does not receive fees for his board service. These arrangements highlight the potential for conflicts of interest, which is why having clear policies on related party transactions, like Xenetic's amended policy adopted in 2020, is critical. This section shows who owns a significant chunk of the company. As of the 15th of October 2025, a total of 2,277,139 shares were outstanding. Dr. Dmitry Jenkin is listed with 9.5% ownership, and CLS Therapeutics Limited holds 6.5%. The combined holdings of all current executive officers and directors are about 7.6%. It is always interesting to see significant shareholders, especially those with board seats. Looking at the financials here, the company has consistently reported net losses over the past 3 years. In 2024, the net loss was about $3.96 million. This is down from a loss of nearly $4.13 million in 2023 and an even larger loss of over $6.5 million in 2022. While the loss decreased in 2024, it is still a significant number for a company of this size. indicating ongoing challenges in achieving profitability. Regarding stock options, the company notes that the assumptions used to calculate their fair value have changed over time. For instance, expected volatility has ranged from about 74% to over 112% in 2024 compared to over 135% in 2022. These changes in assumptions can impact how the company accounts for stock-based compensation. Now let's put all this together. Xenetic Biosciences Incorporated is a biotech company that is navigating a challenging financial landscape characterized by consistent net losses. They are trying to balance investor interests with executive compensation using stock options and advisory votes like say on pay. The company is bringing in new leadership and board members, and they are working with related parties, which requires careful oversight to ensure transparency and fairness. The decrease in their net loss in 2024 is a positive sign, but achieving consistent profitability remains a key challenge. Their strategy seems to involve leveraging their technology through various agreements and partnerships. The increase in executive compensation, even with ongoing losses, is partly explained by severance costs, which is a common practice but can be a point of concern for investors. The company is clearly prioritizing independence on its board where possible. But the interconnectedness with entities like PharmSynthas and Perinus needs continued scrutiny. Overall, Xenetic is in a rebuilding or restructuring phase, focusing on strategic partnerships and managing its financial performance. The key for them will be turning these efforts into sustainable revenue and, ultimately, profit. Alright, that is our breakdown of Xenetic Biosciences Incorporated's proxy statement. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.